Bessa, Paul's mentioned a few things there in terms of interest rates, historical norms, kind of touched a little bit on sentiment factors. Yeah. Can I ask you, for all of us who are kind of keen to gaze into the crystal ball a little bit with you, what sort of future are we wading into as Australians over the next year, perhaps 2 years? I mean, what's the big picture telling us?
Generally speaking, the stock market is now 15%.
Well, I think over the next period of a couple of months, we're just going to see economic activity continue to toddle along. We've got consumer spending growth, which is slowing. You mentioned per capita terms, Chris, earlier. In per capita terms, consumer spending has been going backwards for 5 straight quarters, because one of the areas of resilience that is helping the economy toddle along rather than fall into a recession is the explosion in net overseas migration. Over the last 12 months, net overseas migrants have breached 500,000 in number, which is an incredible number and much bigger than any policymaker anticipated. And the reason why it's so much bigger than any policymaker anticipated is because once we reopened our international borders, arrivals bounced back very quickly, but departures did not. And net overseas migration is net of arrivals and departures. So that population explosion, extra people coming to Victoria and New South Wales predominantly, means extra spending on brown goods, white goods, green goods. And so you have seen consumer spending be more resilient than otherwise would be the case. We've also seen inflation come down from a peak of nearly 8% in late 2022 to 4.1% more recently. We get an update next week. So we're seeing inflation moderate and come down faster than expected. But the Reserve Bank really wants to be convinced that inflation is going to go in the band. And part of that, I think, is because they look across to the United States. And in the United States, what we're seeing is a stickiness of inflation pressures. So for the 3rd straight month last week, the inflation report printed above market expectations. And so at the start of this year, financial markets were thinking that the US central bank will cut 4 times. They now expect the central bank to cut just 2 times. So we've seen the markets push out the timing of rate cuts in the US, and equally we've seen that occur in Australia. We've seen markets push out from about August at the start of this year out towards December now. Part of the move to December, though, reflects what's happening in the United States and the belief that the RBA won't go before the Fed. They may go before the Fed, and I think there's a risk that you see a bit of a squeeze where economic activity here is slowing faster and inflation slowing faster than in the US. So that risk is starting to open up. So from 1 July, you've got stage 3 tax cuts. More money now goes to those households that earn less than $150,000 per year. There are also the households that are seeing more stress on their household balance sheets. So we expect some of those dollars to be spent. That'll generate some modest inflation risk. That'll also help consumer spending and economic activity more broadly. And then rate cuts should come into play later this year, which will then also help economic activity revive to some extent, where you see moving into 2025 on a better footing.